Shares Sombre, dollar on a high as Fed visible going huge. Sydney Asian markets were in a pensive mood on Wednesday as shell-shocked buyers waited to peer simply how aggressive the Federal Reserve would be on costs, with many fearing drastic movement might risk tipping the world into recession. Treasury yields hit decade highs and the greenback a 20-year peak as futures implied it changed into close to positive. The Fed might hike by way of 75 basis points to various 1.50–1.75% in a while Wednesday. That might be the biggest growth on the grounds that 1994, and markets already have fees accomplishing an eye-watering 3.754% with the aid of the cease of the year. Against a backdrop of sky-high inflation, rising fees, and developing recession concerns, the S&P 500 has had its worst begin to the 12 months on the grounds that 1962, stated analysts at Goldman Sachs NYSE, GS. A probable coming peak in inflation might be now not sufficient to see the bottom, and that similar beyond drawdowns have best ended while the Fed has shifted in the direction of simpler policy. That will be some time away, so they advise investors reduce portfolio duration and growth exposure to actual property. With a lot priced in, a few courageous investors were searching out deals and S&P 500 futures edged up 0.2%, even as Nasdaq futures rose 0.3%. EUROSTOXX 50 futures introduced 0.2% and FTSE futures 0.1%. MSCI's broadest index of Asia-Pacific stocks out of doors Japan firmed 0.1%, however is down sharply on the week. Japan's Nikkei lost 1.0%, although sentiment become helped by a survey displaying an improvement in self-belief among Japanese manufacturers. Chinese stocks bucked the trend with an advantage of 2.4%. Data on Chinese retail sales and business output for May had been a touch higher than forecast, however nevertheless confirmed the drag from COVID lockdowns. Authorities in Beijing warned on Tuesday that the metropolis of 22 million turned into in a race against time to become familiar with its maximum extreme outbreak for the reason that pandemic began. Dollar has the yield advantage. Bond markets attempted to rally after their recent hammering, with 10-year Treasury yields dipping to 3.44% and far from Tuesday's peak of 3.498%. Two-year yields stood at 3.38%, after touching the best considering the fact that 2007 at 3.456% overnight. Given many U.S. borrowing fees are related to yields, economic conditions have already tightened markedly there even earlier than the Fed hikes. Treasury yields also are the benchmark for bonds across the globe, so monetary conditions are tightening quite tons everywhere. That is a major headwind for customer spending power, even as pressuring rising marketplace nations that borrow in bucks. It has also tended to reinforce the U.S. dollar, which hit a 20-year high against a basket of currencies, led by huge profits on the low-yielding Japanese yen. The dollar become buying and selling at 135 yen and 7 sen, having reached heights final visited in 1998 at 135.60. The trendy profits got here because the Bank of Japan ramped up its bond buying to maintain yields near zero, at the same time as a lot of the relaxation of the sector tightens coverage. Still, the sheer stress on the yen and bonds has stoked hypothesis the BOJ could be forced to amend its yield managed policy at an assembly on Friday. The euro turned into holding on at $1.0425, now not some distance from its May trough of $1.0348. The single forex has observed some help from a hawkish flip with the aid of the European Central Bank, however is weighed by using signs of stress in local bond markets. Yields for greater indebted individuals, considerably Italy, have climbed tons greater quickly than for Germany, fanning worries approximately EU fragmentation. Surging yields and a sky-high greenback have been a burden for gold, which became near its lowest in a month at $1,814 an oz. GOL. Oil prices edged up after the Organization of the Petroleum Exporting Countries (OPEC) stuck to its forecast that global oil demand will exceed pre-pandemic stages in 2022. OR Brent turned into 31 cents less saleable at $121.48, while U.S. crude rose 30 cents to $119.23 according to Barrel.